I'm Matt Bechard with NAREIT.com here in Reston, Virginia for the 2015 Leader in the Light Working Forum. Joining me is David Stanford, Executive Managing Director at RealFoundations. David, thanks so much for joining us.
Thank you for having me.
Now, David, you've been involved in the Leader in the Light program since its earliest days, and so you're very well aware of the evolution the REIT industry has taken in this area of sustainability. What, in your opinion, has been sort of the biggest change that you've seen?
Yeah, number one, it's a topic on the minds of boards. Now, when we started this journey, I think this is going to be the 5th Leader in the Light session. It was a very nascent thing, not really on the minds of leadership, and with the sort of inclusion of GRESB or GRESB, depending on where you're from, and the push of institutional investors, it's on way more people's radar. It's a serious topic, and it kind of has the weight of capital behind it. I think that's the biggest push. It's now a common topic on people's minds.
And has a company's sustainability activity and reporting become a major differentiator in the market, whether it's tenants, employees, shareholders?
We see some separation, certainly in the kind of the retail world, where some are certainly stronger than others. But across the board, it's still a little bit hard to tell sort of the outperformers versus the ones that are just trying. And that's sort of the point of GRESB, to push the scores and to show and demonstrate the outperformance. But back to the sort of the real world of wrangling all the data and trying to get this information, it's tough because it's a new world, lots of sort of confusing and sometimes conflicting standards. So we still see people struggling at that.
Another issue where people are having some issues, and another topic here that you're actually moderating a panel on is financing these projects. What sort of trends or issues are you seeing there?
The hypothesis is that there is a large chunk of capital out there called SRI capital, socially responsible investors, that represent, depending on how you count it, $5 to $14 or $15 trillion of capital that's significantly underinvested in real estate. Those investors understand fixed income. We've been talking about sort of the coming of the green bond. Green bond is a fixed income product. And they've had a hard time like picking and choosing how to deploy capital in real estate. So accordingly, we are significantly underinvested with that stack of capital. The great news is in the last 18 months, there's been a few pioneers that have issued and tapped the bond market in a big way in Australia, in Europe, and the US, and we have all the people here that are sort of those pioneers out on the Wild West frontier to talk about how that happened. And there's a significant amount of interest, we think, in the investment community and also the sort of the REIT community to be able to tap into that market.
David, thank you so much for joining us today.
Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.